Everybody, good morning. Jordan Dove here. It's Thursday, June 16th, 2022, and our beloved Fed Chairman Jerome Powell had a presser yesterday, and they discussed some things about the housing landscape, and I thought we should absolutely 100% with most certainty discuss this today. And we know that the housing landscape is absolutely brutal at the moment, and this creature, Fed Chairman Jerome Powell, on yesterday, he acknowledged that the brutal housing landscape that us as Americans are facing amid these rising prices in homes and the skyrocketing interest rates, and he's saying that especially the younger would-be buyers need, and I quote and unquote, a reset. They need a reset, and they love throwing this word out there, don't they? Reset, great reset, the great reset. We need a reset. They're throwing it right in front of your face. They're telling you exactly what they're doing. It's right there, the reset. It's coming, guys. It's coming. They put it right in front of your face. But anyways, the Fed chairman, he made these comments during the long press conference yesterday where he discussed the Fed's approval of the biggest interest rate hike in 28 years. 28 years. And as you know, yesterday the Fed raised its rate by 75 basis points yesterday, or 3/4 of a percentage point. 0.75 is what they raised yesterday. But near the end of the press conference yesterday, finally a reporter with some balls, some cojones, finally asked Powell for his take on the real estate market. And, as we know, it's been steadily climbing and home prices skyrocketing, mortgage rates skyrocketing, but right now rates are sitting at about 5.25%, and Powell responded, 6.25%, and Powell, he responded to that question that mortgage rates have been low thanks to the pandemic. Really cheap money that we keep talking about. Money was really cheap. Money's going to get much more expensive, and right now it is more expensive, and it's only going to get worse. But he said rates have been low because the pandemic, blame the pandemic, and he said now coming back up to more normal or above levels, and that's his quote, what he said. However, he said he wasn't sure what that would do to prices. He wasn't sure. And he said, and I quote here, the supply of finished homes, the inventory of finished homes that are for sale is incredibly low, historically low. So it's still a very tight market. So prices may keep going up for a while, even in a world where rates go up. So we're in this environment with these high rates, high prices. We have listings. We're getting a lot less offers, a lot less traction on median price listings. I'm seeing that in my market. We're in a major market, so I can only predict what's happening in the smaller markets, and it's probably much worse. But either way, Powell described the current market as a complicated situation. No shit, you think? And significantly indicated that something needs to change for more people to start climbing the real estate ladder. And here's another quote from our beloved Fed chairman. He said, I would say if you're a home buyer or a young person looking to buy a home, you need a bit of a reset. Again, throwing out that word reset. He said, we need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. So this will be a process whereby ideally we do our work in a way that the housing market settles in a new place and housing availability and credit availability are at appropriate levels. So what does that mean? How long is it going to take for inflation to come down? As Chuck said yesterday, rates have to be higher than inflation. If inflation, what they're reporting inflation is at 8.6, personally, I think it's much higher. Gas prices has doubled. Rents have quadrupled. Okay. Eggs have doubled. This price have doubled over the years, but they're only saying it's 8.6%. If the Fed rate has to be higher than 8.6%, and it's currently at 1.75%, and they're going to do a half rate, 3/4 of a point height rate next month at the July FOMAC meeting, that puts us at what, 2.25, 2.5. Inflation next month is probably going to be in the eights. I predict it'll be about 8.8, 8.9 year over year is what they're going to report. So how long until we can actually bring inflation down and mortgage rates down again? This is going to take years. It's going to take years, and the cost of money is going to get more expensive. Businesses are going to have to borrow money, and they're going to have to borrow it at inflated costs, which means they're going to pass that cost down to the consumer, which means the prices of things are going to continue to rise. I predict we're going to see $10 gas here before you know it. I mean, it's going to happen. It's absolutely nuts. But the Fed Chairman Powell, he did not elaborate any further on what a potential reset would look like. It's, reset. He doesn't know what it's going to look like. They don't know what they're doing. Remember they said the inflation was transitory. It's going to be a soft landing. Man, this is going to crash really, really hard in my opinion. His comment that he made about credit availability in the housing market was clearly a reference to mortgage rates, right? And that comment, as well as his earlier remark he made about mortgage rates being above normal levels, could theoretically be interpreted to mean that today's suddenly elevated rates won't be the new normal forever. But how long are we going to be at these rates? I think the rates have to go higher. They have to go higher because they can't sell the bonds, because you're not getting a return on them. The mortgage-backed securities were not selling last Friday. Nobody was buying them. Who wants to buy something with a 5% return when inflation's higher than that? They have to raise the rates to be able to get people to buy those bonds, right? Those securities. So, in any case, what is happening now with inflation and mortgage rates is unlike anything most practicing real estate agents have experienced in their careers, myself included. And on Friday, the Labor Department's latest report showing a higher than hoped for inflation triggered a bond market sell-off, and that in turn sent mortgage rates climbing even higher. And by early this week, the average 30-year fixed rate loans were topping 6%. And there's one thing they like to say. They always like to say, hey, well, in the distant past, mortgage rates have been higher. Freddie Mac data shows, for instance, that in the early 1980s, average rates topped 18%, but the recent rate hikes have happened at an unprecedented pace, making it harder to immediately parse their impact on home sales and demand. But this is such a misleading statement because the median price of a home in the early 80s, let's say 1982, was $69,000. The median price of a home in 1982 was $69,000. And now in 2022, according to the Federal Reserve economic data, the median price is $428,700. So let me ask you, what is better, 15% on $60,000 or 6% on $400,000? I don't do public math, but I can tell you that paying a higher interest rate on a much lower premium, on a much lower principal balance would be a better deal. Do you see how this talking point is extremely misleading? But if it's any consolidation, even these experts, they aren't sure what's going to happen next, with Powell repeatedly mentioning uncertainty during Wednesday's news conference. These guys have created such a big shitstorm, they don't even know what's going to happen. 3 weeks ago, they said they were not even contemplating a 3/4 of a rate hike increase. They were not contemplating it. And what do? They did it yesterday. That tells me that they know that things are worse than they thought. So buckle up for the ride, put the seatbelt on. It's going to get bumpy, all right? But they did say they're aware that mortgage rates have moved up a lot. Well, no shit. Hopefully they're not under a rock. I'm glad that they know that mortgage rates moved up, because we here on the ground, we understand that. You understand that. He said during the conference, last quote from him, it says, "You're going to see a changing housing market. We're watching it to see what will happen. What's going to happen is we're going to see an influx of inventory because people are going to start losing jobs. We're already seeing the layoffs in my industry, mortgage companies, real estate companies like Redfin and Compass laying off 10% of their workforces earlier this week. We're going to shift back to a buyer's market. It's going to be much more difficult to sell homes. I believe that peak has passed. We may still see some appreciation in the market, very steady, just because of that lack of inventory. There's still investors buying rentals like Wall Street. Talked about it yesterday. First Key Homes, Cerberus, Wall Street hedge fund, still buying stuff. They're still buying it in cash. But that 10-year bond yield is down today. Slight tick, 3.318%. 30-year fix sitting at 6.22%. Slight dip from yesterday. The volatility index, or the VIX, which measures uncertainty in the market, is up 12.56% today, just north of 33. Anything above 20, 25 is considered extremely volatile. The Dow's below 29,000. The S&P is down over 3% today. The market is in absolute free fall. It's in free fall. Collapse is imminent. It's happening. It is happening with your 401ks, your Roths, your retirements, your pension funds. Watch. It's going to get very, very interesting. Not financial advice. If you haven't moved into commodities and cash flowing assets and other hard assets like gold and silver, think it might be a great time to have that and even hold it on hand. Do not buy paper, silver, and gold. I'm out. See y'all next time. Wait. Chuck Barone's coming with his first video later today on his channel. Man, I can't believe how many subscribers he has. Shout out to Greg. Thank you so much. Chuck, former Lehman Brothers guy, Wall Street guy. He's going to give it to you guys straight. I'm really excited. Really, really excited for that. All right, you guys have a good one. Peace out.